Today's topic, preparing for a business loan, positioning your company for approval. And so that's the topic of today's discussion as we move forward here. And we'll do a couple of brief introductions here. I myself am Lucian Smith. Everyone calls me Lou. I am a small business advisor here at the Washington Area Community Investment Fund, one half of what we refer to as the dynamic duo with my colleague here, Rasul Shair, and I'll let him introduce himself as well.
Yeah, good afternoon, folks. Rasul Shair here in co-facilitation mode with my good friend and colleague, Mr. Lou Smith. Looking forward to the conversation and discussion in terms of having the insights, the understanding, and the disposition to get businesses prepared to successfully apply for loans. Lou's going to go into this in much further detail, but just quickly, we have conversations regularly, anywhere to 2 to 3 times daily. If it's a slow week, maybe once a day. But we're constantly having conversations with businesses who are interested in applying for some of our financing products. Some of those conversations are pretty productive. Others, we have to give a little bit more information in terms of how the businesses can be prepared to go forward with, once again, loan readiness and overall business preparedness. So here we're providing some really good information. Like I said, this is going to be based off of Lou has well over a decade of experience in terms of business preparedness, business strategy, loan financing, to just name a couple of things. And my background as well, I've been working in the past 10 years with business preparedness, entrepreneurship, business planning, and marketing. And so we don't know everything under the sun, so to speak, but we can at minimum get you pointed in the right direction with getting the foundation laid for how we can get you all folks set up with getting that business ready to be able to take on these lending support. So with that on the table, Lou, I'll go ahead and pass it back on to you and let you go ahead and kick it into first gear here, my friend.
Thank you. So I guess that is important just to quickly examine, the background or the credentials of the folks who are on the phone with you. And going over this, myself, I've spent 5 years very early on in my career in retail banking. And that, of course, dealt with your consumer loans, lightweight commercial lending. And then, of course, there was the other side of that, which dealt with investments, mainly what business owners would take and do with the funds instead of they're just sitting right in their savings accounts, of course, if they held or had a large amount of retained earnings at the end of the year. But after that, for the past, it's been 12 years now, I've been in the commercial lending space. And so that's business loans, anything from working capital loans, unsecured, secured, SBA, non-SBA, your invoice factoring, receivables, purchase agreements, and equipment leasing, as well as some of your term loans out there. So, being able to kind of have that experience helps us to be able to kind of shape the conversation and give you some really good information, which is what we'll cover today in talking about how to best prepare yourself for a business loan. And so we want you to really think outside of the box as we cover this material today, because this information will allow for you to save your time and money. And of course, those two are really the same when we get down to it. Your time is your money, and your money is your time, rather. So let's talk about it. We'll jump right in. First, let's cover a couple of house cleaning items here. Rasul has already discussed with you being able to place questions into the Q&A section here, and I'm being able to respond to items in the chat. And we're going to go right on ahead and introduce WACIF. Of course, the Washington Area Community Investment Fund. Some really big things happening here for the organization. If you've kept up with the news recently here, but we just want to go over our mission. And of course, very simply put, concisely put, promoting equity, and economic opportunity in underserved neighborhoods in the Washington, D.C. area since 1987. It's a long time, folks. And so, of course, we actually refer to ourselves as the 34-year startup. Because we're constantly, reimagining and recalibrating, as my friend Rasul says, how to deliver service in the best way possible so that we're the most effective in what we do in terms of promoting equity, and economic opportunity in Washington, D.C. And along that vein, we have three strategic pillars. Those are inclusive entrepreneurship, community wealth building, and equitable economic development. And so part of our presentation today will drive home this very important part of being able to build wealth and build a community. And of course, that usually begins with home ownership and entrepreneurship. And so as we go into our subject matter for the day, really concentrating on entrepreneurship, access to capital here is the key. And so, of course, we're going to dive into just how to strategically prepare yourself to gain that capital in whatever position you may be in terms of where you are in the life cycle of your business or in that endeavor that you're looking to take on. All right. Before I begin, Rasul, do you have anything to add in there?
Nope. Like I said, just looking forward to the conversation. There should be some good information. And so, yeah, I think we can continue to move forward, my friend.
All right, let's rock. So the first thing we want to discuss here today is really no matter what, and I don't care what stage of growth your business is in, there's going to come a time when extra cash or a large amount of cash will be needed. Okay, and that's going to come in handy. This will be particularly true right now as many businesses crawl out of COVID-19, the crisis, just what has taken place out there. There are a bunch of opportunities out there just in terms of your being able to start a business or to grab a hold of other companies out there that may be for sale due to their impaired state because of the economy right now. But no matter what, both large and small borrowed capital to fuel your growth and other business initiatives is going to be absolutely necessary. Okay, so when we talk about a business loan or just taking funds from, keeping your cash in your pocket and using funds from elsewhere, this is one of the most sought after methods in terms of being able to fund your growth. Okay, so the first thing we're going to cover today is how banks assess you, and you want to learn how they assess you, because we want you to be one of those educated borrowers, business owners out there who absolutely know how to prepare and prepare your paperwork or your documentation before you get in contact with that lender, that banker, whomever it is you're going to, that family member, that friend, that strategic investor, whomever it is you're going to, so that you put your best foot forward immediately. And you can make a great impression on the front end, which of course heightens your chances for approval. So the first thing we're going to talk about here is just credit scores. Okay. Now, generally speaking, in the absolute best version or the best world right now, having above a 780 is great, right? But very few people have over a 780. Okay. Excuse me. Banks are going to have those kind of typical buckets of what they're looking for in terms of the score. Now, as a business owner, in addition to your business credit profile, your personal credit scores will always be a part of any credit worthiness decision. Okay, especially in the beginning. Okay, after you've built out your business credit and your business credit profile, you can of course apply for credit on the strength of the business alone. But that's going to take some time. It also takes the ability to have worked out relationships with other vendors out there, have established trade lines, store credit cards, major credit cards, etc. But in the beginning, you're going to have to rely on your personal credit a bit if you're like 99% of us. Okay. Now, this is because lenders are trying to determine whether you make whether you can make daily, weekly, monthly payments based on what you've done in the past. And so before you apply for business financing, it's critical that you understand your credit profile. Okay. Now, of course, everyone knows the major credit bureaus out there, making sure that you take advantage of free services like Credit Karma, where you can check out your Equifax and your TransUnion credit scores and credit profiles are going to be key here. Experian is separate. They do not participate in Credit Karma. So you'll want to log on to Experian.com and create a free profile there. They're going to constantly ask you to pay for the the service, they have some other premier platform where you pay on a monthly basis. You do not need to do that. Okay. You simply want to know what's out there, what's showing on your credit profile real time. Okay. We're in the age of technology right now. So, no need to call up and order something, wait for it in the mail. Simply log on to the internet, log in. You can save your password and your username, go right to your credit profile and see exactly what your creditors are reporting on you. Okay. Now, the major business credit reporting bureaus are Dun & Bradstreet, okay, D&B, Equifax, okay, and they offer the same service. And so out there, when it comes to, and Experian also, Experian has a hybrid product, and they have the lion's share in terms of being able of working with most of your fintech companies, especially where they are using a hybrid model to score both your personal credit and your business credit together. Okay, so those are the credit bureaus out there. For personal, Equifax, Experian, TransUnion. For businesses, we're looking at Dun & Bradstreet, Experian, and Equifax, and those are calculated a bit differently. Now, when it comes to your credit, being concerned about the score is one thing, but we're also going to look at your credit history, okay? And so when we talk about your credit history, and we'll get into this a bit further along in the presentation, we're really talking about, what has been your what are your habits when it comes to paying your bills on time, okay? Now, for some credit products, especially if you work or if you're attempting to go to a CDFI, which is a community developmental financial institution like WAKIF here, we aren't really concerned with your credit score, but we are concerned with your credit history, meaning, are you behind or have you had late payments on your house note, on your car note, other creditors out there, student loans, other loans you've taken on? Are they in arrears currently? Do you owe taxes per se? These are things that will show up on your credit report. And if they do, then we're more concerned with your being current at the current point in time and not having filed bankruptcy or, letting those accounts just sit as charge-offs or closed accounts without taking care of that creditor. So we're not really concerned about your credit score, but we are concerned about your credit history. Banks and other traditional lenders, on the other hand, are going to be primarily concerned with your credit score and your history. So although it's reflected in your scores, okay, the length of your credit history is also a consideration for most lenders. And in addition to the length of your credit history, the detailed explanation of your credit usage. And that's provided by the credit bureaus and other suppliers. And that just shows everything from the age of your accounts to how much of each credit line you've used. And think of your score as a snapshot or just a comprehensive explanation of how you've handled your credit, both business and personal, in the past. Okay. Now, keep in mind, most traditional lenders like banks are going to want you to have over 700. Okay. Though, they may go as low as 680. The threshold for SBA loans can vary by lender, but typically 640 to 680 is typical. And then keep in mind, we want to make sure that you are the majority owner of that business, and any other owners, they will want to look out for the same in terms of their credit profile. All right. Now, in terms of online lenders and fintech companies out there, they're looking for you to have at least a 600 credit score, and they will work with you down to a 500 credit score. But of course, those are going to be your revenue-based or merchant cash advance lenders who will charge the most when it comes to the rates that are out there for commercial, within commercial lending, within the space. Okay. Now, third, with your cash flow, lenders want to confirm that you have the ability to make periodic payments. So your cash flow is a good indication of whether or not your business has the financial ability to make payments on a small business loan. And lenders will look at past sales, your expenses, and future projections in order to do so. So don't be surprised if they want to see things like unpaid invoices or give an explanation as to why or how your money situation will look several years from now, especially if you're newer in business. Because if you don't have those past years of history, it's okay. We just want to be able to see where you project yourself to go based on what you've already done or what you've done right now. Okay. Time in business is also a critical factor. So if you're new, and you've opened up less than 6 months ago, that's one threshold. If it's more than 1 year ago, that's another threshold. And then once we get past that 2 and 3 year mark, that's where we really hit the sweet spot in terms of your being able to gain access to capital. Now, if you are a newbie, we do have options for you. We want you to keep a lookout for that as we cover this later on in your presentation here. But knowing that the younger your company is, the newer that you are, you may not qualify for those traditional term loans and products, but you will have access to certain types of lines of credit, especially if you are in the business-to-business space, when it comes to your being able to gain access to funds to pay your staff, pay your overhead if you're in the contracting space, or pay for the materials if you're a manufacturer or you supply a certain type of product in order for you to buy that product and then sell it to your customer. As long as you have a purchase order or an invoice, you'll be in a good position if you're a startup in that case, okay? So time in business will be a critical factor, but there are some options out there if you don't have a lengthy history in terms of being in business. Now, moving along to collateral. Traditional lenders like banks, as well as those who make SBA loans, will likely require collateral for that small business, okay? And collateral can be things like your home. Many of us own homes, or they may be in-state, out of state, or we even may have a business owner, a business partner who may have a home, or even a parent, family member. And there's certain tricks to being able to do this. If someone really believes in you and loves you and they don't have the cash to help you out, they can do certain things if they're really comfortable and they believe in your product or service, or if you have a proof of concept. They can do things like place you on the deed to their house. If you don't have a home of your own, they can put you on their deed, and then therefore you are an owner, or they can sign paperwork to put that house up as collateral. Of course, also equipment within the business can be held as collateral. And so you'll want to know that collateral will be a major piece, especially as those loan requests go up in terms of volume and the amount of money that you're asking for, okay? And if you have a home, simply doing a quick calculation of how much equity you have in the home will make sense. For example, if your home is worth $100,000 and you owe $50,000 on it, well, if you owe 50 and it's worth 100, then you have $50,000 worth of equity. However, most institutions are not going to want to lend above 85 to 90% of that amount of equity you have in your home. So let's just say, for math's sake here, that would mean 90% would take us up to 90,000. We would subtract away the 50 you already owe. You would have access to $40,000 within that particular property. Just depends on the lender and how much they want to go up. And that percentage I gave you was the debt to income, not debt to income ratio, the loan to LTV ratio, loan to value ratio. So when it comes to collateral, property, homes, equipment out there, and again, if you don't own a home yourself, no problem. Try to find someone that can work with you, or a family member or a business partner who can. And we can refer to those folks as strategic investors as well. Now, your industry, that will be a major part of this as well. Some industries, of course, are very risky and some are not. It just depends on what you're in and what type of an environment we're in right now. So, of course, during the COVID-19 pandemic, food services has been hit horribly, right? Restaurants have taken a major hit out there, and they're already one of the most risky out there, but also one of the most plentiful in terms of entrepreneurial startups. But if you're in a field such as transportation, trucking, et cetera, that traditionally has been one of the most risky businesses in terms of lending. But of course, when it comes to transportation, we have many different segments within transportation. And so it just depends on your kind of subcategory or your industry code. But take a look at that, and always ask and probe a lender prior to applying in terms of how they view your industry in particular, because every lending house or lender can be different when it comes to preferences towards certain industries, okay? And of course, loyalty, which is one to consider. If you already bank with a major lender and you have, then you can be more likely to have an application approved. They have access to take a look at your transaction history. They can see the growth of your business. Everything is right there in-house for them. So always think about maintaining and building relationships where you have accounts or where you have done business before, because that will play a part in or how easy it can be for you to be approved at that particular institution. Okay. Moving right along. So next, we're going to talk about how to determine the type of loan or financing that you need. Okay. Now, although you don't necessarily need to be a small business financing expert with a bunch of years of experience, it's important to be an expert in choosing the type of financing that will best suit your business. Okay. Making sure that you understand each product is key, because applying for the right product at the right time can save you a bunch of money. And it can also mean that the difference between rocket growth and a very slow growth trajectory. Okay. So in determining the type of financing that you need, first, we're going to cover the SBA. So SBA loans are available in amounts from $50,000 typically all the way up to $5 million. Okay. And we do have smaller micro loans, of course, that go below that amount. But in looking at this figure, you'll get a lower rate and favorable repayment terms in terms of working with the SBA. And the loan process, can take weeks or months, just being quite honest with you in terms of working with the SBA. And depending on the type of SBA loan that you're trying to obtain, there may be different hurdles to jump through, just in terms of processing your documentation, your paperwork, and other requests, collateral being one of them, in order to get that loan approved. Okay. Now, moving on to traditional bank loans, you can get a term loan or a business line of credit from a bank that you already do business with, okay, or a new one, and pay some of the lowest rates that are out there. Okay. So if you have the ability to be approved at a traditional bank, your Bank of America's, your Wells Fargo's, your PNC's, your Chase's, please do so. Okay. The loan amounts and repayment terms will vary, from 1 to 20 years, and you will get an answer within 3 or 4 months, and approved based on personal or business credit. Now, when it comes to traditional bank loans, of course, if you do not qualify for a traditional bank, then of course we want you to explore other options out there, and we'll cover those here. But whatever you do not be turned away and turned down if you receive a no at one place. There's always a way to figure this out, and you just have to research and have the know-how in order to do so. Okay. The next is going to be a micro loan. Now, micro lenders don't consider your credit to be as crucial as others, but your credit profile still matters. Okay. So these lenders are more inclined to work with smaller businesses, upstarts, startups, younger businesses, and loan amounts that are much smaller. So organizations like Kiva, can finance you up to $50,000. And then also you can get an answer within, 1 month or up to 3 months. And the loan rates, though, are kind of high, considerably, more like your credit cards out there. But of course, this is a viable option. Now, you also have your non-bank institutions that make loans, okay? And this is in the fintech space, especially. Now, because the quick response that fintech companies are able to give you, your Cabbages, your Blue Vines, your Capital Access Network, I know their name has changed now, but your PayPal loans in the back end of PayPal in terms of working capital loans out there, they give you a very, very quick response. Usually it can be within 1 hour or up to 24 hours. Now, these are great, but the rates are not that great. But it will be fast. And of course, if you're willing to pay an extremely high APR, then this may be a viable option for you. The debt will usually be owed in a very short period of time, 6 months up to a year, depending upon the type of product you're qualifying for. It may go out to 5 years, and the loan amounts can range, between $5,000 on up to $500,000. Typically, they're going to stay under that $250,000 mark, which segues us over to the business and merchant cash advance, especially for new companies out there, or if you have horrible credit, or if you just have a bankruptcy that you filed, but at least a year has passed, or if you're, if your back is against the wall, then you have to make payroll. I always let everyone know, now, by all means, make payroll with your employees, even if it's one person or two people. Okay, you'll find out just about how much they love you as a business owner or their boss when you are late on payroll. Okay, so no matter what it takes, please always make payroll. And if you have to pay a higher interest loan or something like that out there, just do it. It's really worth it to the business. And everything can't be equated in terms of or valued or assessed in terms of monetary value. Some things are just worth it because it's worth the people and keeping the people that you have on board. Okay, but with business and merchant cash advances, they are very high in terms of the interest rates that are charged. But of course, these are based on your things like credit card sales and your bank deposits. So if you sell a lot on credit cards, they will factor a portion of your credit card sales. Let's just say 10% of every credit card sale will go to them to repay your loan. And that way they're not subject to your being able to manage your cash flow, et cetera. They're just pretty much attaching it to within your bank setup for your credit cards. And you're able to bring that money right into your bank account and they'll just take their money from there on a daily basis, typically. Best case scenario, it'll be on a weekly basis. Also, you can get what's called a cash flow loan. And those are loans that you can use. Your credit profile is heavily dependent upon this, but those are loans where you typically will use your bank deposit history in order to qualify. So let's just say that you're a company that brings in $20,000 a month. They're going to take a look at the fact that you bring in that 20K gross. They're also going to see at each month how much is left over. So what is your average bank balance, right? So they're going to have that average throughout the entire month in terms of what's left in your bank at the end of each day, that ledger. And they're going to make a determination based on what that amount is in terms of what type of payment shock or what kind of payment you can handle, right? So keep in mind that your banking habits are going to be assessed with most of these products, but especially your online fintech companies out there. So if you have a bank account and you're making a bunch of money each month, 50,000, 20,000, 100,000, but you're taking all of it out each month and spending it, then it really wouldn't make a difference, because the person who makes 20,000, but at least has a bank balance of 10,000 is in much better shape in the lender's eyes, because they have higher leverage, a higher daily ledger balances. Okay, so keep that in mind as you alter or shape your banking practices in terms of your business banking accounts. Okay, next, let's talk about business credit cards very briefly. Business credit cards are really a great way to go, especially when you're starting out, or at least just to have them, just in case, right? In order to qualify for business credit cards, first, you will want to establish trade line accounts. And there's a bunch of information out there in terms of where to go immediately to establish trade line accounts. You'll want to have at least 5 of them. And then you'll want to move on to taking on store-based credit cards. Store-based credit cards are very easy. An example would be BP gas station, getting a credit card there for your business. And when you're looking to do this for your business only, never ever put your social security number on the application, only your tax ID. And you must have a entity such as a LLC or a corporation in order to do this properly and effectively, okay? Having that tax ID is what separates you legally from the business, okay? And so when you're applying for these products, be sure to use only your tax ID for your business, where you can get away with that, okay? Now, when it comes to store credit cards, once you have 5 trade lines out there, you can have 5 store credit cards, and then you can move on to having your regular big league credit cards, such as Visa, MasterCard, and American Express, okay? Now, as we move down to vendor financing, that will be, or typically your trade line accounts out there, Uline and Granger, and there are a bunch of other trade line accounts out there that you can use when it comes to starting out to establish that business credit. And this will more directly, help you in terms of just where you are with that particular contract or servicing that particular customer. You don't necessarily have to go to a bank or a non-bank for a loan, but you can go to the specific vendor that you're going to use to pay for things such as materials. Okay, so covering that, and then lines of credit. Sometimes you don't need one huge outlay of cash, right? You really just need money for the moment to cover certain expenses. Again, materials, payroll, equipment, things like that. Maybe not equipment, but you want to be sure that you have a line of credit so that you can take the money out quickly and you can put the money back. Similar to a credit card, except you want your line of credit to have a much cheaper rate than, say, a business credit card would, especially. And with your lines of credit, you have several options out there. You have your unsecured lines of credit, right? Which means they're tied to nothing in terms of assets. Then you also have your secured lines of credit, which will be tied to, say, equipment or real estate or property out there, right? And then, of course, you have other lines of credit tied to things such as your receivables. And that would be invoice factoring or invoice financing, where if you are doing business with another business and you invoice them on a monthly basis, then of course we're going to tie that line of credit to that particular customer of yours. And let's say you invoice them for $10,000. We may issue as a lender $8,000 to you, which would be 80% of that invoice. And when your customer pays the $10,000, we would collect the $8,000 that we lent to you, plus a small fee. And that's a type of line of credit in addition to the other types out there that can be used. So never pigeonhole yourself with just one lender and one application. Take a look at all of these types of loans out there and see what's a good fit for you, what you possibly qualify for, and do that research on the front end so that you save your time and your money. If I have any questions here, Rasul, let me know. If you want to jump in with some things here, feel free to go right ahead.
Yeah, no questions. I think you're doing a good job so far, but yeah, definitely anything I can drop a couple of add-ons to make the point a bit clear, I would definitely do so. I think we're good up to the moment though.
Great. I have to take myself a drink of water here. Now, when it comes to deciding on a lender, all right, lenders usually fall into one of the following categories. So now that we've gone over your sort of qualifications that you'll need to bring to the table or what they're looking for and what loan product may be best to fit your needs, you can start with the next step of picking a lender. And not all lenders provide all of the services mentioned, so you'll want to narrow your search to those that offer the type of financing you are looking for, and who will be likely to approve your loan application based on your credit worthiness. Okay, so lenders usually fall into the following categories. We have direct lenders, we have lending marketplaces, and we have P2P, which is just short for peer-to-peer. Okay, now with our direct lenders, those are your banks, credit unions, your online lenders, your CDFIs such as Wakef, and then you have other investors as well, strategic investors that can be brought in. You won't go through a third party or intermediary or a broker, in other words, okay, to make your loan application, to receive your funds, or to make your payments, okay? We also have lending marketplaces, excuse me. And with lending marketplaces, that option helps you to find lenders based on your qualifications. You can enter your information in one portal and get matched with the best choice for your particular credit situation or your financing needs. Now, those marketplaces exist online, and applications are relatively quick and compared to your more traditional lending scenarios, okay? What I would suggest here, of course, is being able to do that research on the front end, because there are some tricks of the trade when it comes to working within lending marketplaces or other lending consortiums out there. But they do save time as you're being able to enter one application, such as if you're looking for a mortgage, you can go to, say, Lending Tree. You enter one application and you're going to have, 20 different lenders come back to you and say, hey, I'll give you a mortgage or I'll refinance your house. And you save time instead of having to go and apply at 20 different places to see if they're going to get you approved. Okay. Now, let's move on. Peer-to-peer. For P2P lending space, which has grown quite a bit recently here, crowdfunding is another, term that's used for it. It's an example of P2P lending. And since you have a chance to kind of share your story and explain your situation, your case, your business, you can get funding from a lender who is genuinely interested in you, or a group of people who are interested in you, and they may find this opportunity exciting. And that's unlike your being able to go to a traditional institution, because they're mainly looking at your numbers in terms of, hey, it's black or white. And there's not really that gray space. But with peer-to-peer, that gray space is huge, because people are looking to invest with you, the person, and they want to believe in your story. Okay. Now, some questions to help you decide. Okay. Do you have good credit? If you don't, can you work on it? And again, if we're talking about your credit score, that's one thing, but your credit history is another. If you have those blemishes on your credit, you can simply work on them, make the disputes where necessary to get damaging information off your credit report. And then also, if you have things, such as let's just say tax debt, be sure you take care of it. So when we see things that are lingering, that's really the issue, right? If you have tax debt out there, no problem. Get on a payment plan or file what's called an offer and compromise, an OIC, so that you can settle that debt with the government. So you may owe the government $50,000, but depending on your situation, you may be able to pay them only 10, and the debt's going to be wiped clean. Okay, so do you have good credit? What's showing on your credit report? Another question to help you decide: can you pay the money back right away? Right. So are you able to take on a lump sum of cash and then pay it back a month later? Well, if you can, and that's not going to seriously harm you or hinder your cash flow, then a line of credit product or invoice financing or invoice factoring product would be great, right? Because you take the money out in one lump sum, you use it, you know that you're going to get paid from your customer or selling your product or service. Once you get that money back, you have margin in there, so you would have made more than what you spent, and take the funds that you owe and pay it right back and get rid of that debt. And that way you don't have to pay that interest. So can you pay the money back right away? Take that into consideration. Okay, we don't want you carrying large loads of debt, which of course can hamper your cash flow and put you in a bad position down the road. Okay, now, do you need access to a continuous line of credit? Is this a one-time need or an ongoing need? Also, will I need my funds in cash, or will credit or charge accounts work? So what do we mean by this? Do you need to have this in your bank account, right, showing as a part of your balance, right? Is that what really matters? Or do you just need to have access to the capital itself in the form of credit to be able to pull from? And depending on your situation, what you're doing, and what you're looking to qualify for as an entrepreneur, you'll have to make that decision, because there will be a difference there, and that can either get you approved or declined for whatever opportunity it is that you're seeking. Now, which banks do I have an existing relationship with? Simply put, if you have bank accounts at a couple of different banks, or if you've received a PPP loan from a particular bank, you have a relationship there, and you'll want to lean towards speaking with them first. And notice I didn't say applying with them, speaking to them first, because you want to ask those questions on the front end before you put in an application and gather all your documentation. And that way you'll be able to make a wise, informed decision before you go through all of that just to apply for that loan or that line of credit. All right. Also take into consideration how much money you need. One of the things that we'll often see is where folks will take out money as in the form of a loan, but it's not enough, right? And so then you've caused almost a double whammy, a double problem, because you have some money, it's not enough, in order to do what you needed to do, which, logically speaking, you would have taken out that money to use it to make more. But if you don't have enough to do that, now you just have this money that you're probably going to do something else with, but now you have this monthly debt also. Okay, so really take into consideration how much money it is that you need. And if it's less, if you're going to get less than that, really make sure you can use it to generate revenues. Or if you can't, it's not worth taking out. Okay. And then lastly, am I willing to put up personal or business assets for collateral? And that just depends on the strength of, the product or service that you're providing, or the strength of your customer in terms of their being able to pay, and your belief in that particular product, right? So if this is something that's purely, kind of an experiment, or you haven't quite gotten to a point where you have proof of concept, it really wouldn't make any sense for you to put up your personal assets, right? And because you don't want to lose your home, your car, or have your credit hindered in the process. Okay. Do we have any questions?
Yeah, one question. Someone wanted to know what were some examples of marketplaces for lending?
Sure. Marketplaces for lending. Those can include, you can go to, say, Kiva, Kickstarter. Those are two of the biggest ones out there. There are some smaller ones out there that kind of are industry specific for green businesses, et cetera. But just to start out with, I would take a look at Kickstarter as the main one, and Kiva.
And then I'll post a couple of links that kind of talks a little bit more about the marketplaces for lending and peer-to-peer and what that consists of, and just some other examples as well. And I'll put that in the links in the Q&A for folks to take a look at, or in the chat. And also, Lou, did you have a slide on lending? Somebody mentioned that the direct lender page. I don't know if you had that prepared, or you wanted to speak to any of that information specifically, where there might be some more information to share. If not, then we can just move forward. But someone had mentioned that maybe you went past the direct lender page.
Oh, if I did, my apologies. And actually, I didn't. There's just the page here where we're talking about the different categories per se, not the actual. There's not a page dedicated to each one right here, at least. Okay.
Yeah, just to clarify that.
Just going over it verbally here with you. And you can look at also Prosper is a great one as well for those if you are looking at your P2P lenders, crowdfunding sites. And it's great for those who need a loan, as well as those who are looking to invest in other businesses out there, other business owners. You can take your own money and invest with companies out there. Prosper, and I think Upstart is cool too. Okay. All right. So how do we determine your chances of getting approved? Let's take a look at that. So business and personal credit scores, okay? And note the bank will pull their own copies of these. Why do we say that? Because within our industry here, we do have a growing concern with, a fraud. And so if anyone approaches you online with being able to give you doctored bank statements or tax returns and things like this, never ever entertain any of these things, okay? They do not, or it won't work. And as a matter of fact, it will get you red flagged in terms of, fraud, okay? And so for bank statements, and credit for personal credit scores, they will of course pull all three bureaus in terms of your reports. Typically, they're going to throw out the highest and the lowest and go with the median credit score. And then also in terms of your taxes and things like this, they will have you to sign an 8821 tax form, which just means they're going to have the IRS to send your tax records directly to them, and not just purely go off of what you submit to them and take that as your word. And so these are some things to consider before we go into the documentation piece here. Now, your business bank account statements, and I'm a little out of order here. Make sure that you have those and take a look at those. They will be verified as well. They will do this with you via screen share, or they'll also use a couple of other services out there where you will log in to your business banking account, and they will actually verify all of the deposits in your daily ledger balances and make sure that those numbers agree with the documentation that you have submitted to them thus far. So in terms of the top three here, and looking at your numbers, your financials, those are verified here. Of course, when it comes to any applicable licenses and registrations for doing business in your state, They'll just simply check that out online based on your industry and any other financial documents that they deem to be relevant. Credit card sales, unpaid invoices, and accounts receivables will be examined as well. Those will, of course, if you guys are using QuickBooks or if you have a bookkeeper out there keeping track of your invoices so that you can produce a aging report, an AR, accounts receivable report to show, what's outstanding and what hasn't been paid to you is going to be key, because that's a really good, clear indicator of what your future revenues will be. But also an accounts payable report too. Who do you owe and what debts do you have unpaid out there? Those can be requested as well. And any legal contracts that would be relevant. Franchises, especially out there, have certain covenants within their franchise agreement with you that are restrictive in terms of your being able to take on loans or lines of credit and capital. So, if you have a franchise, be sure that you're clear on what the franchise will allow for you to do if you were a franchisor. You may also need, especially if you're a younger business out there, a business forecast, your projections. So if the company is younger, you'll want to have the business plan or your business plan updated, and you're going to want to import your current financials right into that business plan. A great service to use is called live.plan, live.plan. Okay, and they have an import wizard. You can simply take your current financials that you produced in, say, QuickBooks in an Excel format, import that information right in. You can make sure the lines are lining up correctly. And at that point, what you'll be able to do is then produce or take a look at over the past 2 or 3 years, what you've done so far, and then project what you're going to do in the future based on the growth rate that you've already experienced. And so that way, instead of having an outlandish, totally positive outlook, where your business just blows and booms over the next few years, when a lender sees that, of course, it's given the side eye. But if you have some numbers and figures and facts to back that up in terms of what you've already done and what your growth rate already has been, even if it has been exponential, that's wonderful. You can carry those numbers forth within your projections, and that's very key, especially if you've only been in business for a year or so. Okay, and if it's a year or so, we're using monthly numbers, right? So you don't have to have multiple years on file. Documentation for underserved representation. So for loans, aimed at women-owned businesses, for example. So of course, if you have your certifications out there, women-owned businesses, veteran-owned businesses, disabled companies, etc. If you want to get those designations, that will be key, of course, in our local area here, being registered as a CBE through the District of Columbia, or if you're in Maryland, through the Maryland Department of Transportation, as well as the DC Department of Transportation and MWA, the Washington Metropolitan Airport Authority, as well as the SBA. If you're looking at going after federal work, will be key. And be sure to have those emblems or those award letters as a part of your package when you do apply for loans, or have at least the logo on your websites so that folks can see that. And underwriters do check out your website. Please believe me, right away. One of the first things they do is take a look at your website out there. And also keeping an updated business plan with the details on growth and marketing strategy. So it's one thing just to see your numbers and see the growth you've had month over month or year over year, but why has it taken place this way? What proof of concept have you established that shows how you take $1 and turn that $1 into $1.50 or $1.75, right? So if you're using a certain advertising service, right? Let's say you're using Yelp, and I can see that you're putting in, or Google AdWords, say you're putting in $10,000 a month, and every month when you spend $10,000, it generates leads, and you're able to close on $20,000 in sales. Well, hey, that's great. And so now, that $10,000 you're making each month is wonderful. But what if you were able to put in $30,000 a month, right? And now you'd be able to possibly make $60,000, right? And so being able to describe the details of what you've been doing and why that has worked and how you're going to use this new capital is really key. All the flowery language about you and the industry and everything else is great, but lenders are primarily concerned with what you've done to take $1 and turn that into $2. And so this is where you're able to explain yourself in the details of your business plan. Any
Let me
questions
jump
there,
in
Russell?
Yeah, let me jump in real quick. A couple questions here. So first, you've been in business and contracting for the last 2 years and have been filing taxes simply under your personal, but completing the profit and loss and other documents for the IRS purposes. But everything is solely under your social, but not your TIN. What would that hurt you? Moving forward, should one begin to file under their TIN, even though the business isn't earning as much?
So yes, that is definitely hurting you. You want to file under your tax ID number. And I think you've done the right thing by concentrating on number one, making some money, right? A lot of folks get caught up in, and Russell can attest to this, all of the, the structure of the company and everything else. And the most important thing that you can do is to go in and make sure you have revenues, right? But once you're at a point where you're bringing revenue in the door for your business, you want to really concentrate on the back end here. Separate the company under that separate tax ID, okay? File the schedule for that particular business. I'm not sure what type of entity that it is that you're going to establish or you're going to use. But make sure that you do this pronto and right away. And also all of the other records out there need to be changed to match it as well. The bank account that you establish should be in the business's name under that tax ID, not your social. Personally, you should only be on that bank account as a signer in terms of how you're attached, as well as your public record filings when it comes to the Secretary of State within your particular state of jurisdiction. If that's Washington, D.C. or Maryland or Virginia, then of course you'll want to change how the company appears there as well, including the punctuation, the spelling, everything, L.L.C. or LLC. Everything must match and not be shown as a DBA of sorts. Hopefully I answered that question here, Russell.
Yeah, if they want to respond with thank you or further clarity, please do so. We can take it from there. The second question is, what credit applications for business credits normally are asked for social security numbers so that you can recommend which creditors you are referring to? This is what I think we were just speaking about a few minutes ago.
Can you say that for me one more time?
Yeah, so what credit applications for business credit normally, I believe they're ask for social security numbers, so you can then so you can recommend or maybe restate or say again which creditors you were referring to. I think it might have been something that you were talking about previously, but they're asking about which I'm imagining, I guess, which organization to ask for your social security number.
Which ones? Ask all of
Yeah.
them. Typically, all of them will ask, but you don't want to list it there at all, okay? And the other thing is, especially when you're just starting out, most creditors are not, well, not most, some of them are going to decline you, especially when you're establishing your trade lines out there, okay? And when that happens, it's okay. For a few of them, you'll just be required, you'll place an order for say $50 or so. Make sure you pay it right away. And then, you'll do the same thing again. You'll apply again the next month. They may decline you for a trade line or something again. And then of course, on the third month, usually they'll go ahead and just work with you. But just in terms of you're being able to, start out and grab a hold of a creditor who will work with you, first time out there as a business owner, and you're being able to grab a hold of new credit. You'll want to go with, companies such as, like I mentioned, Granger, Uline is another one out there. You will have, I have an entire list of these, and I can actually this out for you, and I'd have to pull that up here. But typically speaking, your office supply stores are going to be the ones that are going to work with you right out the gate. And it's what they're set up to do, typically, because that's how they are able to make money. They are able to supply folks with these credit lines right out the gate. And so it really works out for them to be able to do this for you. immediately or right away. So
yeah, okay, we got one more question, a follow-up on the very first question, Lou, and then also just to share, if folks, once again, when Lou and I do these workshops, we get lots of questions. And one thing we also want to allude to at the end, we will share our contact information. So some of these conversations can be a bit extensive, and we only have so much time, so we want to be able to get to the presentation. And we will definitely share our contact information. And please feel free to send us an email, and we'll guide you, or we even shared at the end how to set up a counseling session or advisory session, and you can have a whole specific discussion and conversation with any particular questions you might ask. So Lou, I'm gonna add this last question, which is a follow-up on the first one, and we'll proceed with the rest of the presentation. So the person asked, this is responding to the very first question around the TIN. Should they go back and re-clarify their previous year's taxes under the TIN in that case? And then the person just stating that they have a massage therapy business and it's registered as a PLLC.
So rather to go back, and that's a conversation that they would have with their accountant. And it would depend on whether or not they're looking to go after a business loan right now, and how much they're looking to go after it. So why do I say that? I say that because if you look, you're going to qualify for much more money as a business in terms of a loan request when compared to applying as a person, an individual, if you're filing under your own social security number, right? But if you're looking to, make a request for a business loan, right now, coming up in the next couple of months or year, that's a conversation that you should have with your accountant again. But if it's a very small amount, this may be something you can grab a hold of personally. I mean, in terms of going back and refiling your years, in terms of your taxes, that can be a big to-do, and it can be costly as well. I don't know what situation you're in, what type of penalties you may incur if you would. So, I would tread lightly there and consult with your tax accountant. Also, when it comes to moving forward, I would make sure that everything is being registered and paid under that tax ID number. So, hopefully that helps you there, but that's really a question depending upon your particular situation and what all that would mean for you in terms of, I don't know if it would end up making you owe money, or how that would be, whether that would help or harm you going forward. And the second question that you asked was about a PLLC. Is that correct?
Yeah, that's correct, Lou.
Yeah, I mean, that's fine. Just as long as that separate entity that you're using is separated in terms of risk and liability, you would be fine, okay? And so if you have a PLLC, an LLC, and of course, within certain states, there is the PLLC. It's just a professional limited liability company. That's fine. Generally speaking, that's a entity that's used by attorneys or other individuals where there is a very large amount of risk involved of, in terms of, doctors or, people like that. Those are the folks who establish those types of entities out there. And just to follow up on some of those initial places to go and establish business credit for your trade lines out there, those who will accept pretty much anybody that has a new company, a company with a tax ID number out there. Those can be Laughlin and Associates, Quill, Reliable is one of them. I mentioned Uline, Summa Office Supplies, and I mentioned Granger, and then also Crown Office Supplies. Those are where you want to start in terms of moving forward with your business credit. So
just real quick, folks, like I said, Lou Lou, when he does these, a lot of information, it would make no sense for y'all to try to memorize this. So number one, the presentation will be available via our YouTube channel for online demand reviewing. And also I've just put into the chat our online sign up. It's www.wakef.org sign up, and it's in the link right there. And that'll take you to our intake form page. Sign up on there. It'll ask about some information about your business. And then through that portal there, it'll automatically either ding me or Lou, and it will get you all ready and set up for an advisory session. So if any folks have any questions, any further information, some more extensive conversation that go beyond today's workshop, please, by all means, I just included it in the link inside the chat. It's going to be wakeup.org/sign up. Just click on that. That'll take you to our intake form page, fill that out, and we'll be able to get you set up with an advisory session that way as well. So Lou, by all means, please continue with the workshop, sir.
All right, will do. Filling out the application, we're going to go through this here. When it comes to filling out your application to apply for your business loan from a bank, we're going to cover this from a bank. We're going to cover it for starting a business and a loan to buy a business and how to get a loan without collateral. So at a high level, we're going to cover these topically here. With a business loan from a bank, we're looking for you to have good to great credit, okay? We want you to, they're going to also collect information on the assets that you have to use as collateral. And they're also going to want to look for information that indicates that you have an increasing revenue trend. Oftentimes, people say, hey, you can only get a loan from a bank if you can show that you don't need a loan. And it's true, right? Or at least how it may seem on the surface, right? And of course, we know if you're going to a bank for a loan, even if you're in a great position, it's obviously because you have your sights set on something grand, right? So in terms of looking at how to get a business loan from a bank, you're going to want to make sure that you have these things in order. Banks have the strictest application requirements, but you will likely pay a lower rate of interest and fees than any other options out there if you qualify. Next up, how to get a loan to start a business, right? Now, the first thing you want to do, because it's so hard for you to get a loan to start a business, is to look at alternative sources of financing, okay? Meaning, and we have a wonderful webinar that we give on business credit. We have one that we give on buying a business, alternative sources of financing, all of these things. So at a very high level, we're covering these today. And you can check out our content online to look at those other seminars as well. But when it comes to other ways to finance your business, think about what other assets you have on hand, okay? Whether that's equity in your home, equity in someone else's home that you know, love, and who trust you, or whom you may want to bring in as a partner, maybe a silent partner or a strategic partner, or someone you'll give equity in your company as long as they're able to provide you with a line of credit. Do you have a 401k? Never, or a 403b, or your plan, the plans that you may have with the federal government. The name leaves me right now. But you may want to take a loan against that asset, against that balance, instead of liquidating your position, okay? Much like if you have a large stock portfolio, right? Not Bitcoin, cryptocurrency out there, because it's very hard to work with right now, but actual stocks in the market. Taking a loan against those assets will be great. And again, never liquidate those assets. Now, when it comes to your style of servicing your customer and how you accept payment, if you issue invoices on a monthly basis because you have a contract, you can receive what's called invoice financing or invoice factoring, meaning to start that new contract, when you're starting that new business, as long as you have enough to get through that first invoicing period, you're good to go. Okay, let's say you have a couple of employees. Again, with the example, you're going to invoice this company $10,000 or $5,000. As long as you have an invoice factoring or invoice financing relationship with a lender, which is approved before you start the contract, right? Then what you'll be able to do, as soon as you invoice, within 24 hours or 48 hours later, you'll be able to receive at least 70 to 90% of the invoice amount. And that will allow for you to get started. And that's what's most important, okay? And the same thing rings true if you have a particular product that you develop and you have a very large order or a starting order, and you have a purchase order that's signed by that customer, then you can use that purchase order to receive financing from a purchase order lender, rather, and they would allow for you to get money on that particular order, provided that you will use the funds to service that client, sell them their goods, and then that client will pay the lender back directly so that they can receive their money back as a lender. Now, the correct way to approach friends and family, and I put that here before the words proof of concept, we want to make sure that if you approach your friends and family, that you do so in a very organized fashion. What we notice is that many times when people approach their friends or family members, it's not done in the most professional manner. And so just like you would approach a bank, you want to have a business plan, you want to have your projections, you want to show some sort of proof of concept, which demonstrates that you know what you're talking about and that you have real concrete plans as to how you're going to use this money. Okay. And so when you do that, be sure that you have those same items on hand. Okay. If you can, already have the website up and running, already have the business address, already have your business cards, already have your logo, have everything in place. If you can get that it doesn't cost that much to put these things in place. Okay. Maybe $1,000 max, you have everything done. Sometimes if you went the really cheap route, $500, but have these things in place before you approach your friends and family for that startup loan, especially if you're looking to get funds to further what you've already been experimenting with, but you've established proof of concept. How to get a loan to buy a business, okay? So when you're looking at buying an existing company out there, and right now we're in a time where this is an extremely wide open way of getting into business, right? Or expanding your business. You don't always want to buy a company just to get into business, but if you have a business currently, you may want to buy another existing business out there so that you can maybe get a brick and mortar establishment or expand your locations, right? Or you just want to sort of backtrack in what you may already be paying for. So for example, if you're in a company where you rely heavily on advertising and print media, well, maybe if there's a small print shop for sale, you can buy it, right? And now you're able to save all of the money that you were saving on ordering this stuff from a fulfillment shop. And of course, you can service the public as well. As long as that place breaks even, you're making money if you really think about it, because you've saved yourself a ton of expenses, or you've at least flatlined out that cost, right? So right now, because of COVID, and so many companies have been forced to shut their doors. So many companies have been forced, or business owners have been forced out of business. There are a lot of companies out there for sale. Now, what you can do if you want to buy an existing company is you're going to want to use that company's existing financials. Like, what do they already have for the past 5-10 years that they've been out here operating, right? You want to take their tax returns, you're going to get their balance sheet, their income statements, right? And then you're going to use that to qualify for a loan that you're looking to apply for. Another way to receive funds is seller financing. It just means, hey, if somebody wants $100,000 in order for me to buy their business, and I may have only 40, they may be willing to accept $40,000 now, and I'll pay off the other $60,000 over the course of 5 years, right? Or in equal installment payments. Or I may opt to give them $40,000 now and pay a lower monthly payment over the next 5 years. And I would give them a balloon payment, meaning the other monies. So I would pay $40,000 now. I may pay $40,000 over the next 5 years, and then $20,000 at the end of the 5-year mark. So that's how you structure seller financing. Just a couple of examples there in terms of how to get that money to get into business or to buy that business to get approved, right? And then also you can accept equity as collateral for silent partnership, right? Many times we may have a company existing or new where we've kind of hit that point where we can't grow because we just don't have the capital, or there just isn't a way for us to move forward based on our industry or our revenue model. What happens a lot of times to government contractors, because they can't really get invoice financing or invoice factoring because the government will not assign or sign over their payments like another business can. they're stuck. They can't really take advantage of larger contracts out there because they don't have the financial wherewithal, right? They don't have also the know-how on how to get that done outside of this. Now, of course, if you are a federal government contractor, a local business, local government contractor here, you do have resources like WAKIF. We have a line of credit product that is new that we are moving forward with to help those who are government contractors and need funding. Of course, you have to have a signed or a government contract that you have been awarded in order to qualify for that. So if you're starting out, but you don't have anything in terms of, an actual contract, we can't work with you. But of course, if you have something in place or you're looking to go after something and you're already in business, then we're looking to help you out when it comes to your government contracting efforts. We will fund you on those outstanding receivables and your invoices there. All right, so in those cases where you don't have a WAKIF, or you want to grow but you don't have anywhere to turn, you can actually bring in a partner. You may want to take on someone who will give you $100,000 or $200,000 for a certain percentage of equity in your company, because now you have the cash to go after those larger contracts, which is going to catapult your company forward. And you may want to structure an agreement with them to buy them out within a certain period of time if you don't want to keep that equity partner or keep that partner in play in your business. And then, of course, how to get a business loan with no money, which is often an issue that folks have out there, but nevertheless, there's a way forward. Please explore enhancing or using business credit cards, and you have to improve your business credit profile. We have a seminar on that. It's great, teaches you how to do that. Also, personal credit card. These are also a way to do so if you have no cash in the bank, just working with your credit alone. This is how you can grab a hold of monies to use for your business endeavors if you are cash strapped or have no cash in the bank. Okay. And then how to get a business loan if you have bad credit, right? You can also work to establish your ability to repay a business loan by other means. These include, as I've covered before, credit card sales. Okay. Credit card sales will allow for you to apply for what we call a merchant cash advance. Okay, which means they're going to give you, probably somewhere around as much as you bring in each month. If you're making $10,000 a month, they may give you $10,000. You're going to have to pay that off over the next 6 to 10 or maybe 12 months at the longest. And they're going to probably collect money, a small percentage of your credit card sales every single weekday. So there may be, 6% of credit card sales over the next 10 months. And that's how you'll repay your loan. So those are ways to qualify for business loans as well. If you don't have the business credit and you don't have the personal credit, or both of them are bad. Okay. Also, your bank deposits with your revenue-based lending. Lenders can, especially in the fintech world, lend to you based on how much you're depositing in the bank on a monthly basis. And that will, of course, as I've covered with you here, depend on how much money you're actually keeping in the bank, not how much you're making, but how much you're keeping in the bank. Okay. And then also how many deposits you're making as well. And one other thing, please don't pierce the corporate veil, so to speak. If you have a business banking account, please, if you have personal expenditures, send that money or pay yourself into your personal account and then use it there. Anytime we look at your bank account and see a bunch of personal expenditures, it's always a bad sign. We've seen folks who go to the casino and they pull the money right out of their bank account. Horrible sign for a business lender, right? It's perfectly fine if you want to go to the casino, but do so by writing a check to yourself to go to your personal account, and then go do whatever you want to. Just, don't use company funds to gamble with, so to speak. All right. And then, so if you're using your bank account to qualify for loans and you don't have great personal credit or bad business credit, your bank account can save you, be that saving grace, but make sure you take care of your commercial banking habits by properly segmenting your expenses from your personal expenses and keeping money in the bank. And then lastly, in order for you to qualify for a business loan with bad credit, you can bring on a cosigner. And just make sure that the person that you're bringing on to work with you, that you thoroughly check them out, and make sure that your lender will work with you while having a cosigner to join in with you on that application. And with that being said, we want to say thank you for joining in with us today. If we have any questions, we'll gladly take those now. Otherwise, we of course, as Rasul has pointed out, you can go on to wakeif.org, and in the top right-hand corner, you'll see Get Help, and you may feel free to schedule a consultation with us there. And of course, keeping in mind Wakeif's sort of sweet spot in terms of clients. If you are an existing company or you are bringing in revenues, that is really where we're able to work with you. Otherwise, if you are just starting out, or you're kind of pre-concept or pre-venture or what have you out there, we can give you some kind of finer tips, but also just let you know where to go within what we call here our local ecosystem in terms of other business advisory and helpful organizations out there that can help you if you're in your sort of infancy stages in the terms of the life cycle of your business. So do we have any other questions, Russell?
No, we're empty at the moment. I just want to refocus or sort of restate the fact that, or restate that I just posted again. It's actually in the chat twice, but more times than merrier, I guess, sort of way to look at it. I put on there the wakeif.org sign up. And when that's really the best way to get set up with respect to if you want to have any questions further, any specific things you want to sort of work through, any particular business issue or challenge that you're trying to get some specific advice or get some discussion and conversation on with regards to what direction you want to go or what might be the best best sort of decision to make. Please feel free once again, the link is in the chat. It's wakeif.org/sign up. And then we'll just have you fill in a bit of information around your business, just get some background information. And then from there, it'll automatically ping either Lou and I, and we'll, through our automated service, we'll send you a calendar invite, sign up for a date and time that works best for your schedule. And then we can go ahead and get it started in terms of having a conversation with you and trying to get any issues you have solved and get some advice that you're looking for, get those answered. So once again, please look at the chat, wakeif.org/sign up. That will take you to our intake form on our website. And that will be the best first step if you are looking for an advisory session with either one of us.
Thank you, Rasul. All right, everybody. It was a pleasure to serve you today and deliver this information, this content. And that's all, folks. We will see you next time. Have a wonderful day.
And just real quick, Lou, some of the folks saying that the sign-up form isn't appearing for them. So I just want to share, if at the time you had a pen and paper ready, just once again, go to wakeif, WACIF.org/sign up, or just go to our website and it'll be in a big red block at the top of the page with the sign up. And that way, if it's not showing up in the chat, just go to our website and look for sign up. It's right there in red. You can't miss it at the top of the page. So once again, thank you for your patience. Apologize for if that didn't show up in the chat. But once again, for the last time, just for full clarity, we want to make sure get you folks access to us. wakeif, WACIF.org/sign up. And you can set up an appointment with us there. Once again, just go to our website and it'll be a red bubble at the very top of this the website. And it says actually sign up or get help. I'm sorry, it says get help. Can't miss it. It's the only red block at the top of the website. Get help and we'll be able to set you up from there. So thank you once again. Enjoy the rest of your afternoon. Have a great week. And we'll talk with you all very soon.
All right, everyone. Take care.
Take care. Have a good one.